Ready for your hot mortgage take of the day? You better grab your favorite sparkling water, have a seat, because this is a good one. No matter your credit score as a first-time homebuyer, you should always consider an FHA loan over a conventional. I've seen this pop up on my page lately, where loan officers are telling people if they're over a 700 credit score, that they should only choose a conventional loan. Well, let's get into it, because I disagree. Let's go take a look. There's two reasons why most loan officers will tell you a conventional is better than FHA. The first and usually biggest thing is that FHA has what's called an upfront mortgage insurance premium. We just call it UFMIP. This is in addition to your monthly mortgage insurance that you pay too. UFMIP is a one-time charge that's normally financed into your loan, and it's always going to be 1.75% of your loan amount. So basically, after you put your down payment down, we're going to add more money to your loan amount. Then second, most people think that FHA has the lowest down payment requirement at 3.5%. Actually, as a first-time home buyer with conventional, you have a minimum down payment of 3%. So as you look at it, conventional sounds great. No UFMIP, a lower down payment, why wouldn't you choose conventional? So let's look at two full loan options with FHA and conventional, how they would normally be structured by a loan officer, and compare them. We're going to take a 700 credit score, a $300,000 purchase amount, and we're going to do both with a 3.5% down payment, just so we can compare apples to apples. So with our loan amounts, you can see after we add in the UFMIP on FHA, our loan amount is higher. We have our interest rates for today, which would make our principal, interest, and mortgage insurance payments for our full payment for each option. Focusing on the loan amount, FHA, you can see that you're almost throwing away a down payment, but conventional clearly has a higher monthly payment as well. Now, I'm not going to stop there and just say that FHA is better clearly because it has a lower monthly payment, because the real issue is that you're financing more on FHA. But here's a trick that most loan officers will never tell you, because the only thing that they want to offer you is the lowest interest rate possible. They never even want to tell you or consider you having the option to pick a higher interest rate, because most consumers, that's the only thing that they ask for is the lowest interest rate they can. So what if you did that? What if you took a higher interest rate, you paid for UFMIP with a lender credit for taking the higher interest rate, and you didn't have to finance it into your loan? It sounds crazy. Why would you want a higher interest rate? But that lets us compare FHA and conventional with the same loan amount. So exact same scenario. 700 credit score, $300,000 purchase. Now we have the same loan amounts. We have our interest rates for today. We have our payment with principal, interest, and mortgage insurance. Now, once we compare the two apples to apples, FHA still has a lower payment because we have a lower interest rate and we have a lower mortgage insurance. When you look at the difference in payments, you have your year 1 of savings, you have your year 3 of total savings, and you have your savings after year 5, just to show you what that looks like. Working with a broker like myself, these are the options that we understand. This is the understanding that we know about loan programs. This is why a 2024 study showed that people on average saved over $10,000 by working with a broker versus another lender. And this is why you should check out my website, myownmortgageloan.com, where you can check out your own rates, your own monthly payments, your own cost. And this is why we dare you to compare.